Very good evening to you traders. This is Mark. Listen, summer's well and truly upon us, and we do have markets are moving, but the volume is low. And what you've got to be careful of as a day trader, if you're day trading it, and similarly if you're swing trading it too, there's a bit of caution to be had, is the change in volatility that you get from day to day. I mean, look at this DAX for an example. You know, out of nowhere, you've got this huge move on not that much volume, to be fair. Okay, we really started squeezing the shorts here and we had a spike in volume then. But then the next day, you get congestion. And then the next day, you get a little bit of range expansion, but very much capped at that level as we've had today. So it becomes very mixed. You know, how do you trade that as a day trader? What have you got to be careful of? Now, this is something that I've always had to be very careful of. You know, back in 2006 or whenever we were getting massive volatility, it was the same every day. It was huge volatility. You could use those volatility expansion techniques. In other words, waiting for a breakout, a pullback on a trend. You know, and actually that would have worked very well. It's happening very often. There weren't many quiet days. But you know, when you get the summer, and especially when you get all-time highs and everyone's a bit complacent, there's no one's panicking, no one's worrying about things. You get this change in volatility and range, quite extreme from day to day, but volumes tends to stay the same. I mean, this is a great example on the DAX here. You know, how do you play this from a perspective of intraday trading? Now, if you'd been trading it back here and you're buying support levels and selling resistance levels, you're getting on okay for a few days, then all of a sudden that doesn't work, so you've got to have a stop to manage that risk. And then the next day, you know, maybe you start thinking we're going to expand in a range, and we don't, we consolidate, but then it happens the subsequent day, and this then goes way further than anyone expected, way out of its expected range, and you can see actually it caught a lot of people out because of that spike in volume there. But then the next day you get a very quiet day, so which you do expect after a trend day, to be fair. But then after that, how do you play that? Do you look for a continuation? Yes, we break out, but we fake out at that point. So it's very tricky. You know, you've got to be looking from a day trader's perspective about the risk management perspective of your trading. You know, moving from perhaps a range expansion type setup, i.e. like a pullback type scenario or a breakout scenario, to a mean reversion strategy where you are attempting to sell at resistance and buy at support, can be quite tricky, because you know, assessing when the market is going to change condition is not an easy thing to do as a trader, regardless of how long you've been trading. There are clues that you can look at, and one of those is the opening range in the first 15 minutes of the cash open. So if we look at the SPY, which is a good way of looking at the S&P 500 ETF, just looking at the opening range of the first 15-minute candle, and if you get a big opening range, then generally speaking, all you can do is generalize when you're trading, but generally speaking, you're going to get a bit of a range expansion in the day. There was one there, big first 15-minute range in a subsequent trend type day. If you look at this one here, not so much, and it did push lower, but not so great, and the same there's not much going on, but you can kind of see the pattern that we get to emerge here. It's not always the case, but it's something to look out for. Another thing to look out for is the overnight range. So the overnight range, I mean anything, so let's say in the US that would be from 9:15 p.m. UK time all the way through till 2:30 UK time in the afternoon. So what was the range of the market overnight? If it's been sitting doing absolutely nothing overnight, then the chances are, unless there's a catalyst from news catalyst or economic data catalyst, it may well do nothing for the rest of the day. Doesn't always happen, but it's another clue that you can look for when you're sitting down and trading the day. You know, what have I got to be looking for today? Am I in a mode looking for that range expansion, i.e. buying pullbacks, buying breakouts, looking for the market to push on further? Or are the clues telling me this is going to be a range-bound market, a range-bound environment? My trading today, I'm just going to wait for the market to run out of puff to the upside or to the downside, mark on my key levels, wait for the market to probe those, fail, and then take an opposing trade back to a mean, whether that is your VWAP or whether that is some sort of moving average that you like to work off. So It's just framing the day, structuring the day, and understanding no 2 days are the same, but being cautious that we then tend to move from that range expansion back to mean reversion, especially when the volume is low. So being aware that those changes in volatility can catch you out if you're not careful. But as long as you manage the risk, then you're not going to get too hurt. All right, guys, have a great evening, and I shall be back tomorrow.